What is going on, everybody? Welcome back to yet another video. In today's video, I'm going to be showing you how you can potentially make $500 plus a day trading SPY options. But real quick, as always, if you guys do enjoy the free education that I provide on this channel, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. And if you have any future video suggestions, make sure to drop them down in the comments. But let's hop into the video. All right, so one thing I want you guys to keep in mind is if you're a small trading account and you're only trading with $500, $1,000, $2,000, that $500 a day is going to take a little bit to build up to. It takes years of experience in the market. You're not going to be doing it on your first or second day trading, but I am going to be showing you some tips and tricks that can help you achieve this in the future. So first, you want to start off by focusing on consistency. What I mean by that is you're not going to be hitting home runs every single day in the market, but what you are going to be able to do is over time, those base hits are going to build up. Your account is going to build up, and that way in the future you can start adding more size into your trades, and that way you can achieve that $500 a day goal. But when trading solely SPY, the main thing that you want to focus on is going to be sniper entries. Sniper entries are going to allow you to significantly skew the risk to reward in your favor. That way, if you do get stopped out of your trade, it is going to be a small loss. So if we head on over to this day right here, we can see that SPY ended up forming a 5-minute cup and handle. It has this rounding bottom right here, comes up, forms a little pullback, giving the handle, and then the breakout, which is your confirmation to go long. If you ended up getting long towards this 21 EMA, which typically there are going to be 3 bars of consolidation during a cup and handle, your stop loss was right below VWAP in this scenario. And as you can see, what did SPY do all day? It ripped to the upside. If you like to use Fibonacci retracements is also an amazing way to significantly skew the risk to reward in your favor, again utilizing sniper entries. And then real quick, in case you guys did not know, I do have a 450-page book on Amazon titled The New Age of Technical Analysis. So if you guys are looking to learn more about my overall day trading and swing trading strategy, make sure to check out my book The New Age of Technical Analysis on Amazon. The link will be down in the description. If you like supply and demand, you can also use sniper entries there, support and resistance, and so many different strategies. So what you want to focus on is having, I would say, 2, 3, 4 different strategies that you utilize on a daily basis. And you want to make sure that they are high probability setups. Everybody's definition of a high probability setup is going to be different. And you mainly want to focus on those setups, and you don't typically want to trade outside of those setups. Again, you want to focus on where the probabilities are and where your edge is at in the market. Now, once you understand what your high probability setups are, that's when you want to start focusing on those sniper entries. And that's going to require a lot of back testing. So for me personally, when it comes to sniper entries, I like to utilize a 1-minute or a 2-minute time frame. If we're truly coming up to a key area of resistance, support, Fibonacci, supply and demand, etc., you are going to see on the 1 or 2-minute time frame the real reaction to that area. You're more than likely going to see increased volume at your key area, which is then going to confirm that this is truly an area of interest. Now, if the price action confirms, the volume confirms, and you have an area of interest, that's when you can utilize a sniper entry with your stop loss right on the opposite side. Again, if it ends up getting hit, you hop out of the trade. So a really good example is a trade that I ended up taking yesterday on Nvidia. If we look at Nvidia on the 5-minute time frame, we can see that we had this cup and handle right here, nice little rounding bottom. It came up and it gave the 3-bar consolidation pullback right to the 8 EMA. As price pulled back to the 8 EMA and I saw the reaction to the area, that is when I ended up getting long with my stop loss right below the 8 EMA if we started to show weakness, and I was able to ride this thing back up into the high of day and then got stopped out on the remainder of my position. So if you can master a few different setups plus sniper entries, you are going to start seeing a lot more consistency and your losses being smaller if you are sticking to proper risk management. Now, the main thing that is going to lead you to potentially making those $500 plus a day is going to be letting your winners run. This is something that I personally really struggled with, and I see a lot of traders struggle with this as well. So I do want to give you guys some tips and tricks that you can use to let your winners run. And again, going back to what I previously said is 1, you have high probability trades. That's going to come over time after seeing setups over and over and over again. But once you start to notice these setups over and over, and you know that they're high probability trades, that's going to help you with your confidence in the setup. Plus, using that sniper entry, you then have a small risk, again, adding to your confidence, allowing you to feel comfortable in the trade. Then from there, what you want to do is you really want to master watching the price action. This is where I see a lot of people go wrong, because they're looking at their P&L, but they're not watching the price action. Is the price action telling you that there is going to be a larger move? If we're looking at SPY right here on the 5-minute time frame, say that you did end up getting long, did anything on this 5-minute time frame tell you that price was going to pull back? Absolutely not. These are thick green candles to the upside. The volume is increasing. When price pulled back right here, it went into a hammer, and then it had another continuation. When price continued up right here, all it did was start pulling back for 3 candles, which is a bull flag, right towards that 8 EMA. It found support, it pushed up into a new high a day before slightly pulling back again. Again, watching the price action, this pullback was on significantly lower volume. And as we can see, price then continued to the upside and set a new high of day. So again, this is where I see a lot of people go wrong. They're staring at their P&L. They're not watching the price action. They're thinking about locking in the profits, which you do want to secure some of your profits on the way up, but you need to watch the price action, because the price action is going to be the thing that is going to tell you, is there going to be a larger move, or should I get out of this trade right now? Now, say you got into this trade, we have a nice little push to the upside, and then all of a sudden there's this inverse hammer on very heavy red volume. That would tell you, hey, I should probably lock in my profits right now. But if you're truly going to try to achieve those $500 plus days, then you want to master the price action and you want to let your winners run. Now, as price is moving in your favor, you want to start trimming off some of your position, locking in profits. That way you start to feel more comfortable in the trade because you've already locked in some profits. But then from there, what you also want to do is you want to move your stop loss up. Once you're able to move your stop loss up into at least break even and potentially in profits, that's when most of the emotions go completely away, because at that point, you're pretty much sitting here saying, how much money am I going to make today? And that is the best possible scenario for any trader. So as the trade continues to move in your favor, you want to slowly start moving your stop loss up in profits. And again, watch the price action. Is the price action telling you to exit your position? If it is, then okay, you obviously want to lock in some profits. But if it is telling you that there is going to be a continuation, slowly start trimming off your position and move your stop loss up. So those are going to be the main things that can lead you to having those $500 plus days. Now, if you are trading SPY, there's a number of different things that you do want to watch. Obviously, you do want to do your technical analysis on SPY. But for me personally, when I'm trading SPY, I also like to watch ES, which is going to be the futures. Now, the reason why I like to watch the futures as well is because the futures are open 23 hours a day from Sunday all the way to Friday. They open Sunday at 6 p.m. Eastern time, close on Monday at 5 p.m. Eastern time, and then the cycle continues. It's closed for an hour every single day. Other than that, it trades the other 23 hours until Friday at 5 p.m. and then it opens again on Sunday at 6 p.m. Now, because of that, the price action can be slightly different than SPY. I've noticed numerous times that ES will hit a level, but SPY falls short of the area, and there will be reaction. That's why I like to watch ES and SPY. But then sometimes SPY will hit a level and the market will reverse. So it all depends on the price action when ES or SPY are at those key areas. I can't tell you how many times I've had a fib level on SPY and another fib level on ES, and ES hit it first, and then SPY ended up reacting from there. Obviously falling short of the fib level. If you were only looking at SPY, you would have missed out on the trade. So I like to watch ES as well as SPY. And then I also like to watch SPX. Now with SPX, what I'm mainly using this for is more psychological areas of support and resistance. 4,400, 4,200, 4,300, 4,350, 4,450, 4,550, etc. So those intervals of 50, I've noticed tend to be pretty strong areas of support and resistance. And then I also like to use SPX for like major areas of support and resistance. SPX is going to be our cash session. So this does not trade in the overnight session at all. As you can see, it is only when the market is open. And again, we might see a reaction on SPY when SPX ends up hitting an area. That's why I like to watch ES, SPX, and SPY when I am trading SPY options. But that is going to wrap up this video. Hopefully you guys found a lot of value. If you guys did, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. Everybody have an amazing rest of your day, and I'll see you guys in the next video.